Welcome back to another video. In today's video we're going to go know what support and resistance is in forex trading. So let's get started. First thing first, please pause this video and read the disclaimer below. Once done, please continue with the video. I'm hoping that you guys have read the disclaimer by now, so let's get started. First thing first, what is support and resistance? So support and resistance is commonly used by loads of different traders as to, it's basically in forex trading, there's areas that the price prioritizes, or there's areas that we call it key levels, that the price is either respecting or failing to break, or it breaks and then it goes, it turns into the other one. For example, if support breaks, it turns into a resistance. If resistance breaks, it turns into a support. We'll more onto that later. So basically, it is basically like a structure in forex, and for us to understand, what a certain level of price is doing. For instance, it could be a figure that the prices the buyers and sellers are holding. For example, buyers will hold a support level because they want the price to bounce off there and for the price to continue to go up, i.e. in a buying scenario, and sellers will use a resistance level to push the price back down. For instance, like support, you could call it as a floor. So let's just say if you're standing and then the floor is below you but the roof is above you, which is the resistance. So resistance is the roof and the flooring is to support you in order for you to walk. That's a very simple concept that a lot of traders can use. Again, this is really important for us to understand what price is doing at a particular level, and how it works in forex as well. So more onto that on the next slide. Now, understanding support and resistance in trading. First things first, what is support and resistance? Like I said to you, it's an area, like a key concept, where a key level where the price is respecting. So support could be with the floor, where the price is obviously meeting the demand. So buyers like the support level and they buy off that particular level, whereas a resistance is a roof. And let's just say that we're going up and we get to the highest point, and then at the roof point really, and we can't really go any higher, so the roof pushes us back down again. And in other words, some people like to call the resistance as the supply level, and the support as a demand level. Demand is where you buy, so we've got the demand to buy the stock. Resistance is where it's reached a peak price, and now that the stock has quite reached a decent level of resistance, and it's got to a really high point. So that's where the sell-offs happen. Again, it's really important to understand support and resistance. I use that in my daily trading. A lot of other traders use that as their daily trading, and it's where we've got the strong movement of buying, i.e. on a support level, or strong movement of selling, i.e. on a resistance level. So it causes a bounce basically at support level, and it causes a fall at resistance level. So we need to understand how these two work. We'll more onto that later. So demand, like I said to you, support, in other words, we can call it the demand level. The reason we call it demand is because this is an area that attracts buyers, and this is the area the buyers think that this is the price for them to buy, and the price is going to respect that particular level. Because you could look at past data. For instance, you've had a couple of bounces, or you could look at things like the price is really cheap, and we need to buy the price so we can sell it at a higher price. It's similar to a business. We buy a stock quite low and we sell it high. So we buy it at the demand level, i.e. the support level, which is the floor, like rock bottom, and we sell it at the resistance level, which is the rooftop, i.e. if it's really, really high. So that's the concept of support. Demand again means that it attracts buyers, and that's where the buyers are more intrigued to buy a particular stock, because they think that this is a demand. Previously the price has respected this level, and we're looking to do the same, and we're going to buy from this particular level and hoping that it's going to go up to the resistance level and we can take profit from that. So resistance is the supply, like I said to you, it's really high and it's the rooftop. So we buy the stock low, we take it to the resistance level, we sell it at the resistance level. For instance, we close the position because the sellers are there pushing the price down, and that's for them to say, look, but you say to the buyers, look, you've come really high, and you know, this is the peak, this is the rooftop. Now we need to push the price back down again. This is where the sellers kick in, because it's a resistance level, and a lot of sell-offs happen from this level, because the price will put 9 times out of 10, a lot of times out in trading, the price will fail to break a resistance level. So that's where the sell-offs happen, and the price will fail to break a support level, i.e. the demand level, because that's where the buyers kick in. Again, the concept of this is very simple. No need to confuse it, guys. The support is floor and resistance is roof. We buy a low, we sell it high, and that's the aim. That's the way the most traders look at it. Now, moving on. How do we identify these support and resistance levels? We identify them by looking at the past data. We identify them by the movement that's happened in the market, by the candlestick patterns, by the chart patterns that have been printed, and we can look at it whether it's to that particular level. For example, let's just say, you know, GBP USD is at support level at 1.22000. Now this is a really important level for GBP, because that's a support level, and that's where a lot of the buy-ins has happened. Now we can take that data from previously to say, look, we've had 1, 2, 3, 4 bounces, for instance, from this level, and the buyers have really held this demand level, and at that point, because this is the support level, we're gonna put a buy position on, and we're gonna anticipate that it's gonna go to a resistance level where we're gonna look to TP or take profit and basically take our positions out. Now there's multiple ways you can identify this. I will be showing you an example later on as well of how it works to give you a better idea, but for now, guys, I need you to understand what support level is and what a resistance level is. Support is where the demand happens, and resistance is where the supply, for instance, the sell-off happens. So it's really important that, you know, we know which one's which and how it changes as well. I'll be giving you more details on the next slide, where I'll be explaining what happens if a particular level is broken, and then what do we do with that level, and then what happens after that once it's been broken and once it's not been respected. So it changes. For example, if you break a resistance level, it will become a support, because we've gone through a roof. Now we're using that as a support to climb higher. That's a really good example. So I'm trying to simplify as much as I can, so for the beginners and for, you know, the traders to understand how it works. And you know, it's really important that we understand what happens once a level is broken as well, because it's not always going to respect that particular level, and again, we need to know what to do in that particular situation. Now the psychology behind support and resistance is quite simple. A lot of people, they look at the way the market is behaving at a certain point, you know, what the market is doing at a certain price, how the market is reacting. For instance, is the price respecting it, is the price breaking it, what do we expect from the price, and then based on that we can make our decision on which direction we're looking to trade. Many traders, when the market approaches these levels, they will be looking for, they'll have a scenario A. Let's just say that if the support gets respected, we're going to be looking for a buy. However, if it breaks the support and it respects it as a resistance, then we might be looking to sell that particular market, because that support level is no longer valid. So it's really important that we know what we're doing. Again, I'll be giving you more scenarios and more examples. I'll be giving you an example as well, with a breakdown of how I look at it and how you guys can look at it. And again, practice makes perfect, guys. So please, you know, go back to this material if you're confused, and also, you know, if you need any further assistance, but if you need any further examples and so on and so forth, please drop a comment below for the future videos, so I can bear that in mind for you and hopefully do something to enhance your trading in that particular level. Now, next thing is, how do we draw these support and resistance levels? Now, we can do it in many ways, guys. I like to do it as a horizontal line, which is pretty much similar to like a line like this. So I will draw that where I think there's a support level. I'll be showing you an example as well. Now, some people like to draw boxes, but boxes are sometimes they're a bit too, you know, they're a bit too wide, and I personally like doing the lines. It's because it gives me more accuracy at what point I'm looking to enter, and it gives me a cleaner support level or resistance level, meaning that I will have a high probability to take a trade off that particular level, and then hopefully I can enhance my chances or my probabilities to come out in a profitable trade. Now, support and resistance on different time frames. Now you must be thinking, how does this work? What I like to do is I like to mark my higher support resistance levels. For for instance, on the H1, I will mark the support resistance level. I will also go down to levels like 15 minutes or the 5 minutes to see if there's minor support and resistance levels there, and how can we take trades from there. But again, this will take a lot of practice, so I wouldn't recommend you guys to go on the lowest time frames, for example the 1 minute, the 5 minute, or the 15 minute. So start off higher, then you'll have a high probability of taking the trades off these support and resistance levels. But you need to know what direction you're going, what do you expect from the market, if it respects that particular support, if it respects that particular resistance, what we're willing to do, how much we're willing to risk, what way or what direction are we anticipating for the market to go, and then based on that information we can take our trade. Now you can do that on, like I said, you can do that on different time frames, depending on the time frame that you use and depending on the type of trader you are. Now, horizontal lines versus diagonal lines for support resistance. Like I said to you guys, I use horizontal lines. It's quite neat and it just goes perfectly with the way I trade. A lot of traders out there will use the horizontal line. You can use a trend line as well, but it's just harder to draw and it might not be as accurate, whereas a horizontal line will be straight and it'll be much easier for you to to predict these levels and to support them and to mark them on your charts, so that you know how it's working and what do you expect from the market. Now again, I'll be doing a video on TradingView in future as well, so please subscribe and please comment below to my channel, and then hopefully you turn the bell icon on as well, so when I upload a new video you'll be notified straight away, and again hopefully that will enhance your trading in a positive manner. Now next is using candlestick charts for identifying key levels. Now we can use candlesticks charts as for identifying these key levels. How do we do that? I'll be showing you that in the next slide as well. Now a candlestick will print at a particular place. They will respect a particular place, a particular level, whether that's a support level or that's a resistance level. So at that particular level we will draw a horizontal line quite similar to this. You could do this on MetaTrader, you could do this on TradingView as well, depending on what you're doing. And if you don't like using TradingView, it's quite easy to do on MetaTrader as well. You'll go on insert, then shapes, then horizontal line, and you will put it on where you need to put it on. In TradingView you can also go on the tools, and you can pick a horizontal tool. You can select them as your favorites as well. Again, I'll be doing that video on that as well, so you guys could know how it works, and then you can use that in your trading on a daily basis as well. Now next thing is importable and multiple touches in drawing levels. So once we draw a level, for instance we've drawn a level at 1.10000 on Euro USD. Now we know that you have had 1, 2, 3, 4, 5, 6, 7 or 1, 2, 3, 4 touches at that particular level. Then what we can do is we can say like this level has been touched on multiple times. It's a level that's been held by the buyers in the case of support, or it's a level that's been held by the sellers and the buyers are failing to break that level in the case of resistance. So we can use that as our probable factor that look, this level has been respected so many multiple occasions, buyers or sellers are failing to break this level, and based on this probability and based on the aspects and based on the information that's been printed in the market, we can now take a trade, because we know that this level is respected a lot, and the chances of this level being respected again are very high probable, meaning that we'll have a higher chances to win that trade, and then we can anticipate the market will head in our direction. Now advanced concepts are quite simple. Like I was saying to you guys, once a support gets broken, it becomes a resistance, because that's the price. Let's just say if this line is here and it gets broken, first it was below us as a support, but we broke that and we fell through that. Now that's above us, meaning that's resistance. I'll be showing you an example on that as well, and vice versa. Let's just say if we're going up from here, like we're going up from here, and then we've got a resistance level, we've respected that, we've bounced, but the second time we've gone through that level, now we're above this level, the resistance level, and now we're bouncing down on it, meaning that this has become a support for us to go up or for us to go higher. Again, I'll be showing you an example on the next slide as well to clarify any confusions that you guys have. Again, it will take a lot of practice, a lot of knowledge, back data, forward data, for you to know how price works and how support resistance levels are and how crucial they are for your trading. Now, role reversal means that, like I said to you, when support breaks, it becomes resistance. When resistance breaks, it becomes support. So I don't want you to be confusing that. You just need to know that, if it's respecting it, then that level's valid. If you break it, then it changes. So that's, again, we need to understand that. Sometimes there's false outs or breakouts as well, just to trick people, saying that, we've broken a resistance level and now it's going to be buy. So let's just say if you're going up and we broke this resistance level, and now a lot of people will start buying, and what the market will do is they'll just come back down again below this line again. So all the buyers who bought above this particular level will now be in a loss, because that was a fake move, i.e. a fake out. Again, more onto that in future. I'll be making a video on fake outs as well, so please stay tuned to my channel, and you'll learn a lot and you'll incorporate that in your trading. Now, next thing is incorporate volume with support and resistance. Now, what I mean by that is, obviously, the higher the volume, the more the bounces are, the higher the chances are for you, for your level to be strong, for your level to be, for it to be a profitable trade, because you think that, like I was saying to you earlier, you know that the price has failed to break this level, the price has respected this level, and now you can use that as an improbable factor to take the trade, depending on the volume. Let's just say, if there's a lot of buyers on that level, then they will carry on holding the support level, and they will, as a demand, so they will carry on pushing the price back up. Or if there's a lot of sellers sat at the resistance level, they will carry, as soon as you climb up, they will carry on pushing you down. It's like, imagine if you're climbing a ladder and someone's on top of the roof and it pushes you down. So they're at the resistance level pushing you down, and when you fall back down again, then there's people who are supporting you to say get back on the ladder, and you're going back up again. So that's a really good example as well. I'm just trying to simplify it as much as I can so that you guys know what support resistance is and how does it work. But again, don't get too confused. There's another example that's coming as well, and that example has multiple scenarios, multiple cases where I can show you this information, and you can obviously have a look at it. Now, let's get to the main part, which is the example. As you can see, guys, this is a Dow Jones, and this is the example from my own chart, and this is how exactly I draw my support resistance levels. Like I was saying to you earlier, there's a line there, there's a line there, there's a line there, and there's a line there. I like to use lines instead of boxes, because boxes can be way too big. So a line's thin, but a box could be like that big, and it's not really that accurate. But you can draw a box if you feel comfortable to do so. It's just the way I like to do it. Some traders are different. They like to draw trend lines, which is a smaller line, so it probably starts from here and ends there. So let's start from the left here. Now, we're at this level. That was a resistance level. We got pushed down. This became a support. We then bounced off the support, went up to the resistance, and that was a fake move. Like I've seen, that was a fake out, because the sellers of the resistance guys, they pushed us back down again, and this time they pushed us so hard that we fell through the previous support as well, going through another level which was respected a lot. So we marked that as a support level. Again, as you can tell, it was respected a couple of times, 1, 2, 3, 4, 5, 6 times by buyers, and they managed to push the price up, going through the resistance level, which is the previous level that we broke. So we went through that as well to the next resistance level, but this time the sellers were strong and they pushed us back down again, like this on this particular scenario. So then we got pushed through the support, and we almost went to another support level, which was here, and this was a minor support level. So from here we bounced up again, and now we went up, and now we've created another support level, because this was our previous resistance. Now using it as support. We used that multiple times, and we got pushed from the resistance again at multiple occasions as well. So this is how important it is, guys. We see resistance is where we get pushed down from, support is where we get pushed up from. Again, this time we got pushed from the resistance and we fell through the support as well, creating another support, i.e. going back to the same support as we were on. Now this time, when we got to the support level, as you can tell, the buyers have pushed the price back up again to the resistance level, and then resistance has pushed the price back down again to the support level. We managed to hold the support level, but then we fell through again, creating another level that was actually the support, and this time this was a really strong support level because we rejected that multiple times. The price went up to resistance, which was the previous support. Remember I said to you, we broke that support, that becomes the resistance now, and then for the third time we got bounced down, but then buyers held the price again and they pushed through the first resistance, then got to the second resistance. Again, we've seen that we were rejecting at the second resistance, but the buyers were strong and they pushed it through. Again, we need to, now this is an example of fake out. This is what I mean by fake out. So we got pushed down, we went through the support. A lot of people start selling because they think that we broke a support level and we're coming back to get resistance, but guess what happens? You were wrong, and then the market faked you out and you went back up again. So it's really important, as you can tell, how these levels get respected on multiple occasions throughout the trading. And this is why it's crucial to understand what support and resistance is and how does it matter and how does it affect our trading. Again, a lot of practice is required, a lot of knowledge is required. It's not going to be the one day thing where you're going to become an expert, because someone who has 5 years, 2 years, 1 year, or even 10 years experience will know more compared to someone who's just getting started and they're just understanding the concepts. The first thing is understand the concept. Second thing is practice it. Third thing is put it into your trading, and hopefully that will make you become successful. Again, nothing is guaranteed. We can use technical analysis as a historical data to enhance our chances, but nothing is guaranteed. Traders use that obviously as an edge, so they use that as another factor why they should take the trade, whether it's the support level that's been held so many times, whether it's the resistance levels that's the price has dropped from so many times. So again, we need to understand this, but at the same time we need to know there's no 100% success in trading, and always we need to understand and use our proper risk management plan in order to survive in trading. So thank you so much for watching this video. I hope that you guys have learned a lot. If there's any questions, please drop it in the comment below. I'll be more than happy to help. If there's any content that you'd like me to create videos on, please also drop that as well. Please like, subscribe, and come back for more videos. Thank you so much, and I'll see you soon.